Hi guys, it's Matt here again from the Forex Coach, just doing our monthly review to the day and swing trading signal. So just to give everyone an update, there's been a couple of changes. First thing is in the title, we were just trading day and intraday style setups. However, we've introduced swing trading as well to the signal. So what that means is we've got more longer term style trade that we're able to integrate now into this, which should hopefully give us better returns and more setups and more trades that we can take. So just to go over then, we have closed now, we've finished our second month. So as everyone knows, we started this in May and we have now just closed out in June. So the bad news is that we've had a drawdown. So we've had a loss for June, overall loss. If I get up the account, you can see here the overall loss for the month was 1,500. Now, I'll talk you through what happened during the month and the reason why that was, and what we're doing to try and improve the strategy and develop it further. So, as with all trading strategies and trading plans, this is relatively new. So, it's been developed by myself over the last 12 months, and we started it live, as I say, in May. However, like any strategy, you're always going to have drawdown periods. You're always going to have periods where the strategy, the setups, they create losses. And then you'll have periods where they create gains. So an equity curve is always going to go up and down, and any trader is always going to have losses, losing days, losing weeks, and even losing months. What we don't want to really see is losing quarters and losing years. That's obviously something that you would look at, and you would say, well, there's definitely a fundamental issue with the strategy. So as it stands at the moment, we're obviously on this challenge where we need to take £20,000 to £200,000, and we're going to be adding £1,000 each month as a deposit in order to help us get these returns that we need in order to get there. As you can see here, this is our spreadsheet, so this is our plan of how we're going to get there, and we are targeting 5% return per month in order to get there. Now, as we stand at the moment, so for the month, we made a £1,500 loss, which was just over 6% down for the month, which meant our closing balance was that. And our year-to-date net profit now is that. Okay, so overall year-to-date, we were 8.95% up, whereas we were targeting 10%. Which means we're actually down 1.05%. Now, I'm not worried because I'm confident that we're going to actually find that we have a lot of months where we're going to actually have gains like this, so 16%, etc. If our maximum drawdown stays around the target is around 5%, 6% is really the upper limit, but if it stays around that in a month, then the big winning months are going to more than pay for those. So I'm not worried, and we've also got some changes to the strategies and the setups, which I will talk you through. So that's the overall account. As I say, we're slightly down on where we wanted to be. Now we'll have a look at the FX Blue account and see, and I'll talk you through kind of what happened there. So as everyone knows, we started the signal and we just had this ridiculously amazing run where it was almost like every trade that I was taking was a winning, and we went weeks and weeks without even, a good few weeks where we never even had a losing trade. And I kept posting saying, don't go in exceeding your risk because you just think that this guy's found a magical trading strategy and trading setup. I kept messaging out, said, look, we're having a really good winning streak, but this isn't the norm. This isn't what I expected. And just to give everyone a reality check, we've then had these, losing weeks here. So all in all, we actually had this really big run, a couple of weeks of winning. Then we kind of had a flat period. Then this loss here was 1 week. Now, the problem that we've got here is it's overemphasized, and I'll tell you why. So this account started off with a £20,000 capital in it. Now, when I am out the office, if I see a setup that I want to take, I can set up my trading platform to take the entry for me, providing a certain condition happens. So I've done that on 2 indice setups. One was on the DAX, which is the JR30, and the other was on the UK 100 or the FTSE. Now, making a mistake, the platform that I was using had previously been used to trade my account, which was about 50k, or just over 50k. So although the risk was the same, the actual lots, it takes the entry in lots as opposed to pounds per pip. It took basically a trade that was 3 times the size of which it should have done. Now initially I didn't notice because I text out and post all of the trades to the Facebook page, I just copy and paste them. I don't have the pounds per pip or the lot size visible on my open positions. So I didn't initially notice, but then it got to about 15 or 20 pips underwater, and I did notice. And as opposed to closing part of the position off, I just left it, which was my own risk. And basically, I didn't follow the risk parameters for this account, and it caused us to have a drawdown here of about, I don't know, the loss was about £1,300 or something like that. So we should have had a loss of, I don't know, something like £600, something like that. We ended up losing, you know, over double what we should have lost as a result. So this drawdown here should have probably finished about here. Well, then after that, what happened? Well, we started this was the first week in June. We then had some really consistent trading going on. You can see here that we had these trades and these gains all the way up here, steady gains. I think 1 week we had something like a 5% gain, then we had like 3% gain, then we had a 1% gain. Then we changed the parameters slightly. So at that point, that's when I decided that I was going to be adding in order to get to this within this period, this time frame that I wanted, so within the 3 years. And at the 5%, I decided that we needed to be putting in this £1,000 per month. So that's what you'll see here. You'll see then the capital being added in, which is the red line here. You'll see the capital being added in. Originally we was going to do £500 a month, but then we changed it to £1,000 a month, which means that 3 months in then the deposits are now averaged out at £1,000 a month. Okay. So what's then happened since then? So we had this great week, and then we basically had a period of drawdowns where it was almost the opposite of this. It almost felt like every trade we took, we was getting stopped out on, and we had a really big drawdown period, and that was last week. So the last week of the month, we actually finished -6%. So our overall 6% for loss for the month. We had this initial loss, then we pulled it all back, and for most of the people in the signal room, because I told them on this trade just to take 1% risk on each, they would have only had a minor drawdowns. They would have been quite significantly in profit, maybe up here somewhere. And then we've obviously had this drawdown period, which has put everyone either flat or at a slight loss now since here. However, people that were obviously following from the beginning, right at the very beginning, would still be up. So we've actually closed out £1,500 worth of profits. As I say, we're sitting at around 9% up over the 2-month period, so we're not far off our target of 5% a month. So I'm happy with that and I'm confident. Where did it go wrong last week? So the main issue that we found was two things. Number one, the strategy was having a drawdown period. There was a number of probability trades that we take, which are based on divergences and things like statistical hits of the daily pivots and stuff, where you may have on statistics that it achieves and works 70% of the time. But you're obviously always going to have a period where you could have a period of a week where it loses 70% of the time. You know, this is just simple statistics. And that's basically what happened. And I think the main reason for that is we saw this dollar weakness last week, and we could see that it was almost like the monthly candles wanted to close extremely strong. And that's something I've talked about in the monthly analysis that I've done. So what we need to do now is we need to now move forward with the adjusted strategy, and I'll talk you through how I've adjusted it and why I've adjusted it next. So on analysis of where it went wrong last week, and this is something that everyone should do if they have a drawdown period or a losing week, you need to look at it and you need to research, well, why did it go wrong? Is it my setups and my entries? Is it my exits? Is it my risk management? Is it because it's just simply we're having a drawdown period? Did I make mistakes? And these are all things that you need to ask yourself. Now, what is very easy to do is to think, okay, it stopped working, this setup has stopped working. And you need to realise that every single strategy, even the best strategy that anyone's ever come up with, it's going to have periods where it stops working. And you need to either adjust it, review it, or just sit and stick with it and wait. So one of the issues that we had last week, as I said, was the fact that some of the probability-based trades, it was just having a period where those probabilities don't work, and it was mainly because things like the dollar CAD, they were just running and not pulling back, and a lot of the trades and the setups that we would have taken are based on small pullbacks where you can make profits, and they tend to be divergence based, counter trend based, and the trend just kept going. However, one of the first losses that we had was earlier on in the week. So we took a trade, we had some analysis where the analysis was showing to us on the high time frames that the New Zealand dollar against the Swissy was going to roll over a bit. It had this really big run up. We'd had some divergences, some movements, some horizontal sort of range bound price action. So we was in shorts. We was in a short, I don't know, somewhere, one over here. I think we took a second entry up here somewhere. And the analysis was for it to roll over. Now, we had a stop well out the way, what we thought was well out the way up here. And unfortunately, it had this run against us, and it was almost like there was lots and lots of people, that probably a lot of orders. So you've got this high here. There's probably a lot of stop loss orders in this range, and the market has just gone to take everyone out before it does the move that people are anticipating. And as you can see here, the move was very extreme. And in literally a couple of hours, so it took us out literally at the top there. Now, we actually did take another entry short, because from the price action on the lower time frames charts, I could see that there was potential for it to go down. But at that stage, it was such a low risk trade that although we made a tiny bit back, it was negligible in comparison to what we lost. Then the move that actually happened, so from top to bottom, you know, in this, before any sort of pullback, was almost 160 odd pips down to there. So we just got caught out, unfortunately. This is something that happens a lot in the markets. You know, these order books are available for institutions, for brokerages. You know, there are people out there, and you can get the data yourself actually, but you can see where people's orders are based. But at the end of the day, you will know, because you can look at the chart, and you know, most retail traders are taught, well, where do I put my stop? I'll put it above the high and stuff like that. And that's why sometimes you've got to get back in, because if you believe and your analysis is showing that there is going to be downside, and you do get stopped out, and then it looks like this price action is just a spike up to take everyone out, then you should be getting back in and believing in your analysis. We did do that, which was correct, and we did make a bit back. But as I say, we lost, I think, about 1.5%. Just on that trade alone, and then we probably pulled back maybe 0.5%, so overall it's still a 1% loss. We had a similar sort of thing on the euro pound. So again, on the daily charts, what I'd seen was this negative momentum. So we were around about short, I don't know, somewhere in here. I think we had this MACD had crossed over here. We'd had this momentum staying negative the whole time, and then what happens, we had this pullback day, and then we had this blip up day. So if we look at that in a bit more detail, what actually happened, so it was a similar sort of thing, not quite as extreme and as rapid as what happened within New Zealand, but we just kept running and against the larger time frame momentum. So the daily momentum was to the downside. The bigger picture on the monthly showed that there was some downside potential on this, and we were short. We actually added into the position as well, because I thought that this was a great opportunity to take more in. and I think we had a stop loss maybe just above here, and again it just nicked us out. Now we've done the same thing, we saw the price action, got a little bit back on that trade, and managed to make, I think, something like 70 pips, I think, on this bar here back, but again it was much lower reward, so it was only about 0.5% back of an overall 1% loss. So the two trades there I wasn't necessarily massively disappointed with, because my overall analysis was correct. The issue was just timing was out, and maybe the stop losses were a little bit too tight. We needed to give a move like that when we were looking at the analysis on the bigger time frame a bit more leeway. So we actually had a similar thing happen with the dollar yen last week. So again, we had some analysis that showed that there was potential for a move down to a key moving average. So we had a short position on, I think we got in around about here. We had stop loss, I think, up here, so we'd given it, plenty of room above the highs. And what happened is it just went against us, and then we had this sharp move down. Because also around this time we were looking at the indices as well, and they were looking like they were getting ready to roll over and sell off, which they did, which means it would have been risk off, and we would have seen strength coming into the yen and therefore weakness in the dollar against the yen. So we got stopped out again up here somewhere. Similar thing happened again. We managed to get back in, which we've done on all three occasions. There was then a 105 pip move. Now it moved down, we ended up making something like 30 or 40 pips on it. Because I thought that based on the move down there that we was going to get a bounce back up and then maybe getting short again. It never happened, it just kept going. So unfortunately, of the sort of 100 pips available, we only made around 20 to 30 pips on that, and we made maybe about 0.25% back, but we'd lost over 1% or just over 1% on that trade. So that was disappointing. So we'd had 3 trades there where we had kind of got the analysis right, and we were potentially going to get this move down to this moving average that we were hoping for, but unfortunately we just got hit out by the price action. There was a couple of trades where there was a mistake made, where it wasn't necessarily a setup of the strategy, but something that I took. But the main issue was that these losses combined with, because across those 3, that's 3% for a start, and then we'll combine that with our probability-based divergence type setups, which are counter trend, and it just was not letting up. So we look at the dollar CAD, and it was a massive trend down. We are now seeing the push up, which I was expected to some of these moving averages, but I was expecting it down here. There was things like divergences going on and stuff, and it just then kept having another leg lower. Then it would put in a reversal, then another leg lower and stuff. So unfortunately, that just caught us out, and we had a couple on the euro. One was a fundamental based trade, so it was based on the news announcement that came out, and that got stopped out. So all in all, we did have a couple of profitable trades, but overall it was a significant loss there for that week. However, one thing it did teach me was the importance of reward to risk. Now, we've been running this trading signal at an extremely high win rate, over 70%. However, the reward to risk, the target is 1.5. So we wanted to return 1.5 times what we risked. However, we've averaged under 1, under a factor of 1. And the reason for that is that we've had these bigger stop losses, because I'm aware of this action that I've just described to you can happen. But even with the bigger stop losses, sometimes you're still going to get hit by it, and that's when it really hits you. And if you haven't got this reward to risk that's going to pay for these losing trades, it can then affect you even more. So one of the decisions that has been made is to change the strategy slightly, and what we do is we have 2 types of setups. One is kind of continuation based trade setup, and one is a divergence based counter trend swing style setup. On the divergence based and the counter trend based, we're going to have bigger stop losses. However, on the continuation style trades, we can have much smaller stop losses going forward, which should mean that we can get to our 1.5 reward to risk ratio. Once we've done that, when we do have these small drawdown periods and drawdown weeks, they're going to be negligible in comparison to the overall gains that we've seen. So I hope that clears up where we're at for now. As I say, everything's open. All of the trades are being publicised on the Facebook page. I've literally logged every single trade, whether it's been winning or losing, and just showing everyone how we're doing it and how we're going to get there. For people that are watching this and thinking about joining the Signal, and you're not sure, you're in two minds, don't forget you can come in for a 7-day free trial, or just sit back and watch and have a look and wait for another 2 months and see where the statistics are showing we're going each month once we've got another couple of months worth of data. It's still early days, but I'm confident now that we're going to see these gains, and we're going to hit our target of 5% per month, and we're going to end up hitting our £200,000 target within, if not under, the 3-year period. I hope that helps. Have a good week trading. Bye.